So look, ladies and gentlemen, if you want to be poor, I hate to say this, you can go to school, but you still won't learn anything about money. And education is more important today, but what do you learn about money? Most kids now going to school, they're coming out of school deeply in debt with student loans, still not learning anything about money.
Robert Kiyosaki, known for his thought-provoking insights on financial matters, has sounded the alarm on a risk many of us might be overlooking: the risk of losing our homes. Throughout his discourse, Kiyosaki sheds light on the intricate workings of banks, their borrowing practices, and the symbiotic relationship they share with borrowers. He points out the fundamental concept of fractional reserve banking, where your deposited money doesn't sit idle but serves as a foundation for lending and investment activities. Moreover, he cautions about the risks associated with the banking system's heavy reliance on debt and leverage, creating a precarious financial ecosystem. Kiyosaki's warning isn't just about the banks potentially taking your home. It's about the economic factors intertwining with lending practices. He emphasizes the importance of understanding how economic downturns can impact loan repayments, likening it to a recipe with several ingredients: the economic factors. As we delve deeper into Kiyosaki's warnings and explore alternative perspectives, it becomes evident that there's more to safeguarding one's home than meets the eye. In this video, we will dissect these insights and empower ourselves with the knowledge to navigate the complexities of the financial world. Let's jump right in. You see, banks are like the middlemen in the economy, playing a crucial role as intermediaries between those who have money to spare and those who need it. Robert Kiyosaki, the financial guru we're discussing today, sheds light on this very aspect, emphasizing how banks serve as the grease in the wheels of our economic machinery. Now here's where things get interesting. Ever heard of fractional reserve banking? This is the cornerstone of the modern financial system. When you deposit your hard-earned cash into a bank, it doesn't just sit idly in a vault. Nope, it's put to work. Banks only keep a fraction of these deposits as reserves, ensuring they have enough cash to cover withdrawals. But what happens to the rest? Well, that becomes the foundation for lending and investments. This success forms what we call the money multiplier effect, a fundamental aspect of how banks create money by lending out a fraction of these excess reserves. So let's break it down even further. Say you deposit $100 in a bank. They might keep $10 as reserves and lend out the remaining $90 to someone else. Now that $90 doesn't just stop there. It gets deposited in another bank, allowing them to lend out a fraction of it, and the cycle continues. That's the magic of the money multiplier effect. It stimulates economic activity by fueling loans and investments, all stemming from those initial deposits. Now, let's roll up our sleeves and dive into Robert Kiyosaki's urgent alert about a potential risk that's like a shadow lurking in the corners of our homes: the systematic weakness in how banks handle borrowing. Kiyosaki's not mincing words here, he's ringing the alarm bell, suggesting there's a flaw in the very foundation of how banks manage the money we entrust them with. He emphasizes how banks, due to their poor choices, have ended up accumulating toxic assets. These assets are essentially bad investments or loans that have significantly lost their value. These toxic assets pose a serious threat because banks are holding on to them without marking their decreased value. This systematic weakness within the banking infrastructure creates a situation where banks are teetering on the edge, potentially affecting homeowners' financial stability. Now let's get real about what's happening. Kiyosaki pulls back the curtain on how banks over the last few years made some questionable choices. Thanks to the removal of reserve requirements during the pandemic, many banks are sitting on deposits with virtually nothing in hand. They use these deposits to buy bonds, and that's where things get dicey. With interest rates rising, those bonds are losing value, and banks, according to Kiyosaki, are sitting on a ticking time bomb of toxic assets. Alright, let's dissect the economic factors that Kiyosaki's been waving the flag about, signaling potential risks of banks snatching homes. Jobs become scarce, businesses struggle, and suddenly, folks find it challenging to repay their loans. It's not just about individuals, it's a collective struggle that affects the whole economic ecosystem. Kiyosaki has been vocal about how these economic downturns can shake up the stability of borrowers, making it harder for them to honor their loan commitments. Now, let's flip the coin and consider the bank's side of the story. They're not immune to these economic whirlwinds either. Here's the kicker. In an environment where interest rates are on the rise, banks face a conundrum. They have amassed a portfolio of assets, typically bonds with low yields and long maturities. But as interest rates climb closer to 5%, the value of these bonds plunges. The regulations might not mandate banks to mark these assets at their current market value until they're sold. So what happens? Banks end up accumulating what Kiyosaki calls toxic assets. These assets have lost a chunk of their value in a rising interest rate scenario, painting a worrisome picture for the banks, maneuvering through turbulent financial waters. This scenario creates a tricky situation where borrowers struggle to keep up, and banks find themselves juggling a portfolio of depreciating assets. Kiyosaki flags this as a fundamental risk factor in the financial system. The harmony between borrowers and banks is disrupted when economic downturns hit, amplifying the possibility of banks resorting to drastic measures, like seizing homes due to borrowers defaulting on loans. Let's talk about a financial tightrope that many of us walk on: debt and leverage. Now, borrowing money is a bit like getting a magic carpet ride from a bank. They provide the funds, and you promise to pay it back with a little extra. We call that interest. It sounds cool, right? But here's the plot twist. It's a double-edged sword. You see, borrowing can be a fantastic tool. It's like using someone else's money to make things happen, whether it's buying a house, starting a business, or cruising in a new car. But, and it's a big but, things can get dicey if you bite off more than you can chew. Now let's break it down a bit further. You borrow money, you have to pay it back. Pretty straightforward, right? But what if your business hits a rough patch or you lose your job? Suddenly, that borrowed money becomes a heavier load, and the interest starts piling up like a snowball rolling downhill. It's a financial snowball effect, and not the good kind. Here's where the bank side of the story comes in. Banks also borrow money, and when they lend it out to us, it's like a game of financial chess. They're using other people's money to make more money. Sounds strategic, but if too many folks can't repay their loans, the whole chessboard gets shaky. Kiyosaki's dropping some truth bombs here, labeling debt as a liability. It's like carrying a backpack filled with rocks. The more debt you have, the harder it is to move forward. Now let's delve into the alternative avenues that Robert Kiyosaki passionately advocates for: cryptocurrencies and financial education. Kiyosaki, in his trademark straightforward style, warns about the inherent flaws in the traditional banking system and suggests exploring alternatives for a more secure financial future. Cryptocurrencies, according to Kiyosaki, stand out as a viable solution. He emphasizes that these digital assets like Bitcoin operate independently of governments and central authorities, offering decentralization and security. In times of economic uncertainty, Kiyosaki contends that cryptocurrencies can provide a stable refuge, unlike traditional currencies tied to the fluctuations of national economies. But what makes crypto so appealing? Well, it's all about breaking free from borders. Imagine being able to transact seamlessly anywhere in the world, without the limitations of traditional fiat currencies. Kiyosaki stresses the borderless nature of cryptocurrencies, highlighting their versatility for peer-to-peer transactions. Whether you're a globetrotter or someone with international ties, the advantages of crypto become clear. A financial system that transcends geographical constraints, endorsed by none other than Robert Kiyosaki. But hold your horses. There's more to this financial empowerment, according to Kiyosaki. He stresses the importance of financial education, and I couldn't agree more. You see, having all these alternative options is fantastic, but knowing how to navigate this financial landscape is the real game changer. Financial education helps you make informed decisions about debt, investments, and most importantly, understanding the risks involved. If you're feeling a bit jittery after Robert Kiyosaki's alert, here's a little reassurance. You've got the power to take control of your financial castle. It's not about banks showing up on your doorstep randomly. It's about understanding the game and making smart moves. Kiyosaki is not just sounding an alarm. He's like that wise friend nudging you to build strong walls and have a plan for any storms that might come your way. Now let's talk about a key ingredient in this financial recipe: financial literacy. Kiyosaki is emphasizing that understanding the language of loans, making timely payments, and having an emergency fund can make a massive difference. It's like having guards at the gates to keep troubles away. So don't let financial jargon intimidate you. Arm yourself with knowledge. Kiyosaki's advice is like having a mentor guiding you through the maze of financial terms, ensuring you're not just a homeowner but a homeowner with a strategic plan. If you enjoyed this video, guys, make sure to subscribe to the channel, like the video, and watch this one as well.